Okay, I think I've got it. All right, ladies and germs, are you guys seeing a clear picture? Mine went fuzzy for a second. I'm seeing trading do's and don'ts. You're not seeing anything at all, Ed? Or is it got black in the background and stuff? It's all messed up. Yeah. Okay, black in the background. Okay, let me do this. And let's some of my okay. Mm-hmm. Okay, where did it go? Where did it go? Oh, there it is. Is that better? I just had it in a different spot. Okay. Yeah, just what happened is I'm using Applian. I'm recording it, and I think possibly the TC2000 pop up in the background got in the way of the video right in the middle of when I was doing it. All right. It's a little bit of, kind of filler on a Friday afternoon, but I think it's more than just fluff. Like I said, I've used this before. And it helped me get started and to kind of analyze what it is that I should be doing, and to get on the path to being a profitable and professional trader. Well, that's true, Stuart. Number one was define what you want to get out of trading, and I got the idea of coming up with an mission statement that comes from the business world or whatever, because it basically gives you the high level goals. What are you trying to do? Do you want to earn a certain amount of money? Do you just want to do it for fun? That's fine. I mean, there's some people that have got enough money that they only do it for the fun of it. So, and that's fine. You know, do you want to be in control of your destiny? Well, you better talk to the lady of the house about that. And or do you just want to impress your friends that you're a trading wizard? Sometimes people fit all of those, and all of those can be uh, great objectives. I would not put anybody down if that's what they wanted to do. But what they have to do is they have to decide what it is that they do want to do, because a lot of people get wrapped around the axle and that they are, you know, they say they want to make money and whatever, but what they're doing is they're not focusing on doing that. They're focusing on not looking silly, looking good in the shower type of thing. So the whole idea is define and put it in writing. All of these need to be put in writing. What do you want out of trading? And be as specific as possible. Because there's the smart rules for trading. SMART. In business, there's a smart. Well, I adapted that for trading. It may not be the best way to do it, but it's what I have kind of come along to mind. If you guys have any things that you think might be better, please make a suggestion. The S in SMART was keep it simple, just basically simple. Keep it simple because I'm stupid. I'm going to make errors. I'm going to have emotional things and do stupid things. So I just got to make it simple. I mean, if X happens, I do Y. If Z happens, I do A. That kind of thing. Measurables. You have to have quantifiable rules. If they're not quantifiable, they really aren't rules. They're guidelines. They need to be attainable, meaning realistic. A lot of people say, "Oh well, I want to quit my day job and I need $100,000 a year to do that be comfortable." Okay, and how much would you to get Now let's just divide it. Let's make it 60,000, so that you've got to get 5,000 a month on average. Okay, to get 5,000 a month on average, how many trades would you have to have? How often would you have to trade? Well, some of these things are things that you could get out of TV 2020 to help you analyze what it is that you want to do and to analyze whether it's realistic. Well, I've had people say, well, they want to earn $30,000 to $60,000 a year, but they've only got $2,000 to do it in. I went, well, unless you use futures and some other highly leveraged product, you're probably not going to come close to doing that. Not even going to come close. So most people, when they first get into trading, have totally unrealistic expectations of what they can get to and where they can start and how soon they can get there. Now, it took me day trading every day for 9 months before I got to start to feel comfortable that, and maybe I'm slow. I know some people are faster than I am, but I think that I don't think I'm any better or worse than the average necessarily. And it's going to take about the same time that it takes you to get some sort of master's or doctorate degree, some postgraduate degree, to get good at trading the markets. And most times you're not going to get any help. You're going to get feedback. You're going to get feedback every day. You can look at your profit and loss. But you're probably not going to get any help from the markets. You might get some help from the people here. All right. It needs to be repeatable. Just because you made a successful trade, if you did it for the wrong reasons, it's probably not going to be repeatable. Only time I see repeatable for people who have just started out in the business are usually mistakes when they keep losing money. Like when Doug was talking about people, hey, well, every time they got into a trade and it turned against them. Well, most likely they were buying at resistance. They kept repeating the mistake that they made. Anything you do really must be technically supportable. Now, when you come up with those rules, they not only need to meet all the other criteria, but they need to be something that we can see and measure on a chart. It's quantifiable in our chart. So that comes back to our trading plan again. Define your risk tolerance and plan accordingly. You know, there are conservative trading strategies. They're highly aggressive, and then everything in between. I'm somewhat of an aggressive trader when it comes to my futures trading, but I'm very conservative when it comes to longer term holdings and stuff, and then I'm a little more aggressive in the day trade. So, you know, it all depends. And then I need to think it's very important for you to do a self-analysis and find out not only how much you can put under at risk, how much capital, but how do you react under the stress. Now, I think I've heard Doug mention the other day that when people get into a trade, it starts to go against them, they start to get really, really nervous, that more than likely they have on too much risk. They've got too big a position. Now, if you define a dollar amount, like Doug and I do, you already know that the worst case scenario, minus any slippage and commissions, you've already analyzed the trade. You know you can live with it. So don't worry about it. One of the ways to getting around this, and I might be jumping ahead a little bit, is when I first started, I was trying to move the stop up, and I was watching what was going on. And one of my mentors just said, Steve, you had the plan, put your targets in, put your stop in, let it go. all or none. If it comes back and gets you, we saw that happen today. It got within a tick or two on my oil trade. I did move the stop down to break even +2, but I didn't get really nervous. I just showed you what I was doing. I told you what I was thinking about. The fact that it probably was going to come take me out, but it was part of the game. Now, so the whole idea, and I guess, is you have to do the self-analysis of yourself, and some people are probably not cut out for trading, and therein lies part of the problem. It's really difficult for us to tell someone you need to find a different hobby, or a different profession. I mean, I've had to do that when I was an instructor pilot. I had one student that basically was incapable. He could fly the jet and he could take care of everything as long as it was normal activity, and he did very well. But when things unusual happened, he got flustered. He couldn't think fast enough. He'd done it. If you asked him in an academic situation, sitting on the ground, what would you do if X happened? He would always answer in the correct manner. But when he got up into the air and he ran into stuff, he either wouldn't see the situation or would forget about what he should be doing. Okay. Thomas, I can post those to the room. That's not a problem. Can remind me. Okay. And so the idea is, not everybody's cut out for trading, or not everybody's cut out for a certain type of trading, either day trading, futures, swing. Some people should probably put their money in mutual fund and go let a professional money manager manage it. So you have to decide what you can do. Simplify. Remember the KISS principle? I got this from a mentor. Some of the most simple trading strategies are almost always better. Look at what Doug does. It's very straightforward. It's fairly simple. And a lot of people discard it because, well, it can't be profitable. It's too simple. Well, yeah. It's not always like that, guys and gals. Trading can be complicated when you put all this stuff together, but you need to try to figure out what's important and what's not. And you need to try to come up with a set of rules, indicators, or whatever that works for you. Now, I posted something in the room, I think it was yesterday, and trying to take on back test a strategy. And either in paper trade or real trade, do 20 trades. Follow the plan. If the signal says buy, you buy. You don't do it blindly, but when it comes up, you purchase it. You buy or sell, whatever it is. You trade the plan, trade the strategy. Do it for 20 times. Keep a journal of it, and then see whether it's doing okay or not. Now, you may have to look at it, and maybe you need to be sliced by time, day of the week. There are other factors. Is the market going up? Is the market going down? Is the market flat? Basically, is the market helping you or hurting you? And those kinds of things. And other than that, maybe if the market's going down and this is giving you a good setup, only enter half, only enter a third or a quarter of the position. Do it on a paper trade first. Do it 20 times. What'll happen after you do it 20 times? You'll see how often that it works or doesn't. And eventually you'll find a strategy and a set of rules where it works, and you'll have confidence in it. And you'll pull the trigger every time, and you'll be successful. And you won't have fear. Now, I'm going to get into that in a little bit. You need to commit yourself to do whatever is necessary to be successful. Now, in our lives outside of trading, like Thomas, like myself, or whatever, hard work can overcome deficiencies or whatever. But we've learned how we could do things and study and be successful. But some of those things that make us successful in, I'll call it the non-trading world, the outside world, are not necessarily helpful. They may be, but they're not necessarily helpful for us in trading. So what we have to do is find out what is going to be successful. We have to study and constantly analyze what we're doing. Constantly, the trade journal, that's why it's so important. And probably one of the most important things in a trade journal is not the profit and loss. It's probably not the entry. It's probably over in the comment section, where in the comment section you have, what were you seeing? What were you thinking? And a lot of the comments that I put in are after the trade is completed. Like this morning when I had something happen to me on that oil trade around 9 o'clock. Now, I don't know whether the trigger happened. I'd have to go back over. I'll do it when I do my notes at the end of the day. But it gave me a trigger, and then suddenly when I looked at where I did the entry, it had gone away. The signal had changed. Well, part of the problem was, I have to document what that was. And you have to be very critical yourself, and you have to analyze and go back. If you traded the plan absolute to your plan, and you do it 20, 30, 40 times, then you'll have an idea of whether it's successful or not successful. If you sit there and you find out that you did not follow the trading plan, which is possible on mine, maybe I didn't see what was going on, then does that count against you as a loss? Well, no. I didn't follow the trading rules, so therefore that one should be thrown out. All right, here we go. Number 5, hope, fear, and greed. Somebody told me that a trader has only 3 emotions: hope, fear, and greed. And most of all 3 of these are going to work against you all the time if you allow it to creep in to your psyche. A lot of people will go out there and they will get in a trade. It starts to go against them. They're getting signals that are telling them that they should exit, but they stay in it for hope that it'll turn around. And hope also is kind of probably a little fear. The fear of, my God, if I get out now, I'll prove that I'm wrong. Or if I get out right now, it'll whip right around and go in my direction. There's the fear of losing money, and there's also the fear of missing out. And that's what happens at tops. The people, and that could be kind of construed as greed. People also stay in too long. Now, I had a trade in DRIP where it made my first target. It made an intraday signal that I think today that it was possibly going to turn around and go south, but I was trading my plan. Was I being greedy? Well, no, I wasn't on this one, because I knew that I was going to give it about $1 to come back, because it was an oil exploration trade. Because I know it's going to be volatile, especially when we had the moves the other day. And oh, by the way, I didn't have the fear because I'd already put half away yesterday. So there are ways that you need to eliminate hope, and you need to eliminate the greed factor. And one of the ways that I found to eliminate fear factor for me was, and to scratch that little part of me that wants to be successful, that's how I really began starting to take partial profits. Because taking a partial profit, you got money in the bank. Let's just say that I hit target. I made $1 on the DRIP trade. Let's go over here. Let me show you what I did. Ah, I don't even know what it's doing right now at the moment. Aha. In fact, because I didn't, you notice what I said? I didn't know what it was doing. I trusted the fact that the setup was there and that my stochastics RSI, my confidence was that it still says it wants to go up. The moving average is still one. I need to give it room. It hadn't closed earlier this morning. It was down here below $18. My stop was going to be a close below $18. I only looked at it a couple of times this morning. I didn't look at it any time during the middle of the day. Part of it's coming back. Okay, so the whole idea was plan to trade the plan, and because I got in at 1708 and I took some off at 1903, almost $2, with 2050 was my target, and the only way I was going to get to that is if I could let it breathe. And I said, okay, I'm going to let it come back. I got almost $2 in my pocket. I could let it go $2 the other way and still not be a negative trade, a losing trade. I could let it come all the way back to where I bought it, and I'd still have $200 profit on the 200 shares I bought. That gave me the confidence to be able to turn away from it. Okay. Avoid the urge that you want to be proven right. Kind of linked with hope, fear, and greed, but there are many of us that believe in our abilities and whatever, but we also, especially men, need to stroke their egos and they want to be proven right. And they'll do anything they can to be proven right. And where this comes out a lot of times is revenge trading. If you get into a stock or into a trade and you get stopped out, that's fine. It's going to happen. No matter what the odds are that are in your favor and you follow it, sometimes they're going to turn into losers. Sometimes you get stopped out and you go, aha. I don't know if this was the case with Doug, but yesterday they opened up and took it down below his stop. But at some point, he could say, no, the setup had, I traded my plan, and my plan had me to get out with a stop. But somewhere during the middle of the day, it climbed back into being a back in the saddle, back into the successful trade. Could he have gotten into that one again? Sure, if it met the criteria. What he needs to what a trader needs to do is to make sure that you're not trying to get back in when it comes right back up because you got, oh, darn it, it bounced against me. Let me take an example here. Not that one. Let's just say that in this trading, I wasn't following the system. I was just following the candles. And I saw it come out here and I said, oh, it's going to bottom. I'm going to go long here. And it's going to go long here and it rolls over. And I go, oh, gosh, well, I've lost money on that one. And it comes back here and I'm going to go long again. And it goes down here and go, oh, darn it. I got to get out because it's turned against me. The whole idea is you have to make sure, maybe that's not a good example, but you have to make sure that when you get back into a trade, it's not trying to satisfy that ego factor to be right. If the parameters were correct in the first place and you got stopped out, so be it. If it comes back in and meets a new buy signal, I don't mean it new that it wasn't, but becomes a trade that you would take if that first trade had never happened, then it's okay to take it. If you look at the parameters and the setup, and if you had no prior trades in that security or symbol, if that would give you a buy signal or sell signal, do it. If it doesn't, you have to analyze why you're doing this. It's probably for revenge purposes and for ego. Let me read this. Last thing I want to say on this, beware of the experts. You need to be your own expert. You need to read. And, there are, there are so many people that are going to say the talking heads. Some people say turn off CNBC, don't read things or whatever. That might be a bit harsh and a bit unrealistic. And you probably, that's the fine line. I mean, the early on, when people are doing the trading, they probably need to turn the radio off. Don't necessarily listen to every doom and gloomer or rosy, everything's going to the moon type of prognosticator. Most of those people are out there just trying to sell something to us to get our money. Most of the people that are out there doing that, if they were so darn successful at it, why aren't they doing it and not talking to us about it? Why are they trying to sell us something? Now, what's different about most of the people in here is that we're not necessarily doing it for the money, because if it was for the money, we wouldn't waste our time talking to you guys. We were helped along the way, and we're trying to give back. All right. So the whole idea is that early on, until you get very comfortable, maybe turn off all fundamental things. In fact, they'll mess you up more than they won't. Okay. Let's see. I have the smart rules and the trading rules. Do you guys have any questions on that? I'm going to look and see what Thomas is. Okay, he's talking about a stock. Oh, he's talking about the spiders. Thomas, you're in our players, sir. Yep, let the force be with you, Thomas. Trade the charts. Basically trade the charts, and you know for yourself what your biggest weakness is. One of your biggest weaknesses is trying to forecast, and that's the part of trying to be right. And you know it. We've talked. So that's my biggest fear. Was a fear of losses. Still is. I have to overcome it every time I trade. It's built into me, because when I first started, and the late 90s and the go-go 90s, I took a $10,000 profit. It turned into a $7,500 loss. And that scar is still with me every day. I just have to put it aside. Yeah, beware of the experts. Okay, if anybody else have any questions or comments, I am going to post. No, I'll get those for you, Thomas, right now. I'm going to turn off my recorder, and